newsmakers, and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here at Bloomberg's Future of Greek Finance Symposium in Athens, sunny Athens. Now, here are your top stories. The U.S. gives Ukraine the green light to use long-range missiles to strike some targets in Russia to defend itself from attacks from Moscow. While the search for Donald Trump's Treasury Secretary is in disarray as contenders tussle for support, with infighting spilling into the open. Plus, HSBC asks hundreds of managers to reapply for jobs as part of the new chief executive's efficiency drive. So, happy Monday, everyone. A lot going on, of course. Today, we get also quite a lot of data. We're waiting for the full cabinet picture for Donald Trump to emerge. So let's take a look at the European markets map. Again, stocks posting some pretty small moves. Again, this is after last week's retreats, erased a big chunk of the equity market gains since Donald Trump's U.S. election win. Traders, I think, looking to fresh pointers on growth, but also the path for interest rates. So let's also go to cross-asset, look at what treasuries are doing, euro, dollar, and then a couple of the commodities that could be extremely interesting given what's happening in China. Concerns also are lingering about the president-elect's potentially inflationary economic policies. Attention now is on his pick for Treasury Secretary. So you can see some of the things we're watching out for. S&P futures gaining 0.1%. So the U.S. has lifted restrictions on Ukraine's use of some long-range Western-made weapons to strike military targets inside Russia. Well, President Putin's forces launched a 120-missile barrage at Ukraine over the weekend, striking energy infrastructure. So let's get more from Bloomberg's Kevin Whitelaw. Kevin, thank you so much for joining us. So what does this actually mean for the conflict going forward?
Well, I think it's going to be interesting to see just what this actually means. We do think that the change of targeting rules includes some limitations about exactly where Ukraine can use those weapons, and it's probably a more limited area than Ukraine would like. Obviously, Kyiv's interest is to try to figure out how to hit some of the Russian ammo storage facilities, as well as some of the areas from which these attacks on its own territory are staged. But it's just not 100% clear they're going to get the kind of leeway that they were originally hoping for.
So, Kevin, what does this, the new cabinet, we know that Donald Trump is going for loyalists, but there's a bit of a tussle for the Treasury pick. There's like, 3-4 candidates? Who could it be?
Well, I mean, I think originally we thought it was down to a choice between two, Scott Bessent as well as Cantor Fitzgerald CEO Howard Lutnick. But, they seem to have gotten into a bit of a scrap with each other. And that's the kind of thing Trump doesn't really like. He doesn't really like that sort of public jockeying and attention seeking from the people that he's choosing. And so it does now seem that the search has widened, a couple of other names being thrown out there to the point where I'm not sure anyone knows what to think about any of it right now, other than the auditioning still seems to be a lot about showing loyalty to Trump, showing the ability to make Trump's case on television. And so I do think you're seeing a handful of these various candidates out there trying to find not so subtle ways to show that there'll be people who can go out and carry his message for him.
Kevin, how quickly do you think the appointment would come? And do we know anything about style? I mean, does he pick the secretary speaking to others, or is there an interview process?
Well, a lot of what he's been doing has been actually just watching clips of them on television and really trying to sort of see, hey, is this the person that I can envisage in this job and envisage out there defending my case to the American public? That sort of public-facing side, combined with just straight-on sort of loyalty, have been the most important things. I think he understands the Treasury pick is maybe a little different than some of his other picks. He's been always tied the sort of performance of Wall Street in closely to sort of, how he's doing, and sees that as an important measure. He does have a lot of friends and colleagues, sort of associates that are obviously deep in the Wall Street world as well. And so I think he knows that this pick is important to him and a lot of the people he knows. He wants to get it right. And so I think he's a little torn as he hears people talking about who might be best for the market versus who might be best for carrying out his agenda. And I think ultimately that's the choice he's going to have to make.
So interesting, Kevin. Thank you so much, Kevin Whitelaw, there with the very latest, of course, on Ukraine and the potential pick for Treasury Secretary by Donald Trump. Now, let's also talk about the markets and how they've been reacting to some of the appointments. Let's get straight to Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, thank you for joining us, as always, as we have a little bit of a clearer view of what kind of personality Donald Trump is going for. What does it mean for the markets?
Thanks, Francine. Great to be here. Well, I think we can't exaggerate the importance of that Treasury Secretary pick. If we look across a number of the things that the market has been concerned about, we think about what happens to tax cuts, what the implication is for fiscal deficit. We know that bond vigilantes have almost been signed together over the last couple of months. And then, of course, tariffs and what the inflationary impact of that is going to be. So I think the market is watching really closely to see how that pans out. I think there'll be a more positive market reaction, of course, if you were to have a candidate or at least a pick who is a little bit more skeptical about the idea of having significant tariffs being introduced.
Seema, if you look at, the market definitely rallied on the election of President-elect Donald Trump, and now there are many, many question marks about actually what happens next. What do they worry about the most? Is it a dollar rally that could also hurt emerging markets, or is it really tariffs and the resurgence of inflation?
Well, I think, the market recently, in the last couple of days, you've seen a slight shift. There's this renewed focus on what are the inflationary implications. We know that the market has really been, I think, encouraged over the last couple of months by the idea that the Fed is going to be cutting rates over the next coming months and into 2025 and, potentially into the late part of next year. The idea of tariffs being somewhat inflationary means that you could see a slower path for the Fed and, of course, an earlier end to Fed cuts. And the market doesn't want to see that. So I think that's the key thing that the market is really watching out for is what are the inflationary impact, how much tariffs going to be. And I think the fiscal deficit conversation is something which almost becomes more of an issue as you get into 2025 and certainly into the second half of next year.
So if we also look at deregulation, how do you build your portfolio?
Well, so it's a great question because, we've got all this, volatility concerns about inflation. And then if you take a step back, and we think about what has been the fundamentals, what's been driving the economy over the last couple of months, the markets over the last couple of months. As I said, there's Fed rate cuts, but it's also been the idea that you've got the soft landing coming into play and earnings growth has been positive. Deregulation is something which would reinforce the idea of a soft landing. It's why you've seen financials perform so well. So I think that is the other thing. And I think that that's part of the idea where the market is very clear that there should be some movement towards deregulation. And it's, I guess, the reason why, from our perspective, as you look into 2025, we're still expecting the equity market to do very, very well. We expect to be a fairly positive returns year in 2025.
Seema, when you look at some of the markets, I guess the market reaction, is there a danger that Donald Trump will want to do more because the market has already priced in some of the encouraging news that he said he would do?
Well, I think that is certainly a risk. And I think the market is really playing off that over the last couple of days. But it's important also to remember about history and what history tells us about elections. Typically, the market does shake off a lot of the election noise fairly quickly after the election. Now, I think this is a slightly different impact potentially because of the inflationary side of some of the policies that have been suggested. But I think that we do know that Donald Trump does watch the equity market very closely. He does want it to do very well. So I think that we almost can think of the market as a bit of a regulating force. If there's a negative market reaction, I would expect that you could potentially see a bit of a pullback in policies from the president-elect.
And Seema, very quickly, where do you expect dollar to go in this kind of environment?
Sorry, I didn't hear that.
Dollar, what happens to dollar? Because, this changes everything for emerging markets. Are we going to see a dollar rally, or will President-elect Donald Trump trying to keep it low?
Well, so we've heard from him over and over again over the number of years saying that he prefers to have a weak dollar. The truth is, though, is that if you have got any kind of inflationary type of policy, anything which is going to create U.S. exceptionalism or at least exacerbate U.S. exceptionalism, the chances are that you're going to see a strong U.S. dollar. So there are certainly risks for emerging markets. We need to see how, of course, China plays out. What is there going to be their stimulus plans in not exactly retaliation, but in response to what's coming out from the U.S. So generally speaking, we are expecting U.S. dollar strength. Valuations are very, very high. So we're somewhat skeptical about how much further you could see the U.S. dollar appreciating from here.
Seema, thank you so much. Seema Shah, their chief global strategist at Principal Asset Management, stays with us. We'll talk a little bit about the UK and Europe next. Now, Bloomberg has also learned that members of Donald Trump's transition team have told advisors they plan to ease U.S. rules for fully self-driving vehicles. Now, if the new rules enable cars without human controls, that would, of course, directly benefit Tesla chief executive Elon Musk, who's become a very powerful figure in Trump's inner circle. So on the back of that, you can see Tesla gaining some 7.5%. Now, HSBC has also asked hundreds of managers to reapply for jobs in the firm's newly formed corporate and institutional banking division. Now, this comes as the chief executive, George El-Hederi, continues his hunt for ways to make the bank more efficient. Well, Bloomberg has also learned that interviews are already underway. Sources say the process will result in the British bank beginning to dismiss several hundred managing directors and other senior bankers in the coming weeks. So coming up, we'll have plenty more, of course, on some of these big stories. Also, China's Xi Jinping tells President Biden he's ready to work with Donald Trump to improve the relationship between the world's biggest economies, but with a warning over decoupling. We'll discuss that next. And this is Bloomberg. Now, world leaders are gathering in Rio de Janeiro this week for the G20 summit. Among those attending, of course, U.S. President Joe Biden and the Chinese leader Xi Jinping. Well, Xi told Biden that he's ready to work with Donald Trump to improve the relationship between the world's biggest economies. Now, Xi also used the meeting to lay out a warning on China's red lines. Well, Bloomberg's Katya Dmitrieva joins us now. Katya, thank you for joining us. So what are these 4 red lines, and what do they say about the relationship between the U.S. and China going forward?
Well, the 4 red lines are not necessarily new, but when Xi and Biden met over the weekend, it was sort of a chance for these leaders to lay out what they hope will be a blueprint going forward. And these 4 red lines, and I'm paraphrasing here, but it's do not interfere in China's economy or try to limit economic growth, do not interfere in Chinese politics and governance, do not try to bring democracy, and of course the Taiwan issue. Do not try to address the Taiwan issue. Nicholas Burns actually spoke at a conference last week here in Hong Kong that I attended, and he said that the relationship between US and China is inherently competitive. So hearing those kinds of things and these 4 red lines being reiterated in a sense from Xi, it's clear that tensions in this relationship will probably just continue going forward, especially under President Trump.
Yeah, Katya, I mean, the thing is geopolitics seem to be, of course, the number one thing on the agenda. But at the same time, Donald Trump is not there. So how will they navigate that? Do they actually need to wait, mid-January? I think inauguration is like January 21st to then really talk about what happens next.
Yeah, that's right. Trump a little busy at the moment in the United States, kind of holding this job fair for a Treasury Secretary, as we talked about earlier in the program. I think once Trump comes in, once he starts announcing policies, obviously there will be something to work with. But I don't think that should discount what happens at the G20. These kinds of global events are really a chance for leaders to meet each other, exchange cards, and kind of have these trade deals and potentially announce, make some new announcements. Last year at the G20, the U.S. and EU supported or released this initial support for a corridor between the EU and the Middle East and India. So, these kinds of meetings are a good chance for these new relationships to be formed, and especially on the trade issue. This is the number one thing ahead of the election that everyone from markets to economists have been trying to game.
All right, thank you so much, Katya, with the very latest, of course, on some of these extremely important multilateral meetings. Now let's get back to Seema Shah from Principal Asset Management. Seema, again, I guess, these tariffs and this possible trade war, not only fragmentation between the U.S., but also China. What's the right way for China to react? And is this, the China economy is also a concern because of the real estate sector. So how much do they need the U.S. at this point?
So I think, for investors who have been looking at China over the last couple of months, they've all been waiting. What is the fiscal stimulus plan going to be just to reset the China's economy from its own domestic issues? Once you start to throw in the potential of a trade war with, potentially 60% tariffs, it reinforces the very urgent need, I think, for China's policymakers to really step in with that fiscal stimulus. Now, there's been positive market reaction, I think, after the initial ideas that there would be some kind of stimulus measures coming through. But for that to be sustained or even almost to come back at this point, we do need to hear some kind of action. And I think the trade war is one of the reasons why you're seeing investors holding back at this point, just to see exactly how is China going to respond, what are their plans going to be in play just to reset their property market and then also to counteract the impact from tariffs.
Are you expecting more of a bazooka coming from PBOC and others because Donald Trump is in the White House and we don't really know what he does in terms of fragmentation and tariffs?
Well, I think what we're starting to see is that China's policymakers are waiting to hear exactly what Donald Trump is going to be introducing. And that suggests to us that you're not going to see a bazooka. That cautious pace is something about stabilizing growth rather than completely turning China's economy around. We had that sense for the last 2 years, and certainly that comes through even further now. But it probably does mean that they need to increase the fiscal stimulus more than what they had initially been planning, given that we now do know that there's going to be tariffs coming in some level in 2025.
Seema, is there a danger that we're so preoccupied by what the U.S. does that we forget some of the underlying, issues or even strengths of the EU and the U.K.? So what do you do with these two regions?
I think it's a really difficult case for next year for Europe, more so certainly than the UK. We know that there's a chance of tariffs on Europe, but also they really do sit in the crosshairs of anything to do with China. So China's weakness is certainly going to impact Europe. And then, of course, as you were mentioning before about the geopolitics, Europe is really in a vulnerable position in terms of what happens with the Russia-Ukraine war, but also with regards to NATO funding. They would have to step up that funding at a time where European governments are already struggling with their own deficits. So I think it's actually quite difficult to make a strong case for Europe in 2025. It's one of the reasons when you look across the world, we have a significant preference for the US, but certainly even emerging markets stand up in front of Europe as we look to next year.
Seema, thank you so much. Seema Shah, their Chief Global Strategist at Principal Asset Management, joining us, of course, on all things G20 and all things Donald Trump. Now, coming up, Germany's Greens have picked the Economy Minister, Robert Habeck, to lead them in the snap election. We'll have the latest on what that means from Berlin. This is Bloomberg. Now, Germany's Greens have picked the Economy Minister, Robert Habeck, to lead them into February's election. This comes, of course, as support for the Chancellor, Olaf Scholz, from his party weakens further. While Bloomberg understands some members of the SPD would prefer Defense Minister Boris Pistorius to lead the campaign. Let's get more from Bloomberg's Ollie Crook. Oliver, thank you so much for joining us. So what do we know about Olaf Scholz's call with Putin?
Yeah, so listen, Francine, the call with Putin came, I think, as a surprise to many people on Friday, and actually Bloomberg broke the story once we started to get wind that this was going to happen. But what happened was he spoke for an hour-long phone conversation with Vladimir Putin. We understand that afterwards there's going to be sort of an open channel of communication. We've heard the reaction from Volodymyr Zelensky, the president of Ukraine, none too pleased about the fact that this call happened, saying that basically this opens up Pandora's box. The resistance and criticism has been a lot less harsh from the likes of other key allies like the U.S., the U.K., and France, potentially because we were told that Scholz had given them a heads up. They would have this conversation before he actually made the call. What I think is interesting is, why is Olaf Scholz the one making this call? He's one of the first G7 leaders to speak to Vladimir Putin over the last 2 years, really breaking some of the silence and isolationism at a time when Olaf Scholz himself is not in a particularly strong position. And Olaf Scholz, in his entire time in the Chancellery, has really been reticent to take a leadership role in Europe and on the global stage. So it comes at a little bit of an odd time. But what I think it highlights, Francine, is this this dilemma that the Europeans are feeling. What they keep saying is that no decision should be made about Ukraine without Ukraine, alluding to the fact that Donald Trump may speak to Vladimir Putin. The concern for Europeans increasingly is that decisions might be made on Ukraine without Europe, which is why potentially now trying to get a temperature read from Vladimir Putin, from Olaf Scholz, and really sort of this dilemma that Europe has to really try to get a seat at the table if there are going to be negotiations going forward under Trump.
Ollie, Germany's Greens have also picked the economy minister, Robert Habeck, to lead them into February's election. So this comes as support for Scholz from his party weakens further. Like, what do we know about what happens in February?
Yeah, so listen, so the SPD has two choices right now. They have their incumbent candidate, Olaf Scholz, and they have their defense minister, Boris Pistorius. Overall, we should say that the SPD is not going to be very likely to change these candidates very clearly, very swiftly. It's going to be a very high bar. But right now, 66% of Germans think that Pistorius should be leading the SPD into election, not Olaf Scholz.
Ollie, thanks so much. Oliver Crook there with the very latest on Germany, our big story over the next couple of weeks. Now, coming up, we take a look at the controversy surrounding U.S. President-elect Trump's cabinet picks. That's next, and this is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Athens, and these are your top stories. The U.S. gives Ukraine the green light to use long-range missiles to strike some targets in Russia to defend itself from attacks from Moscow. The search for Donald Trump's Treasury Secretary is in disarray as contenders tussle for support, with infighting spilling into the open. Plus, HSBC asks hundreds of managers to reapply for jobs as part of the new chief executive's efficiency drive. Now, a couple of things we also watching out for. Liberty Energy actually jumping as much as 36%. This is as Donald Trump has picked the chief executive as energy secretary. Now, I have to say the concern is that a lot of the appointments by Donald Trump will personally benefit because of the companies that they have. So something to watch out for in case there's any pushback. But for the moment, Liberty Energy getting some 30%. Now, the fight over Donald Trump's chief economic policymaker is definitely heating up as business leaders, billionaires, and Wall Street executives are all pushing the president-elect to choose their preferred candidates to lead the Department of Treasury. Now, over the past few days, the president-elect has also picked a number of loyalists to take up prominent roles in his cabinet. So let's get more from Thomas Gift. He is the director of the Center on U.S. Politics at University College London. So, Professor, thanks so much for joining us. So help me make sense of all of this. First of all, given the pick so far, do you have a clear idea of what happens to policies, but also what kind of people the president-elect wants to put in his cabinet?
Well, I think if there's one word that describes who Donald Trump is putting in his cabinet, it's loyalty, or maybe more accurately, fealty. I think Donald Trump really perceived that the mistake that he made in his first administration was putting in inside the Beltway types, Washington insiders, kind of status quo, bureaucrats and other high-level officials who had spent their career in the nation's capital. He is determined not to make that mistake again. And I think, this time around, some of his picks were even surprising Republicans. He was telegraphing the kinds of individuals that he wanted to put in these high-level positions, from Elon Musk to Vivek Ramaswamy to Pete Hegseth. But yeah, it's quite something still.
Yeah, I mean, what does it mean in terms of policy? Because I keep on hearing that Donald Trump will often listen to the last person that he spoke to, and that's his policy. So does his cabinet try and jostle for attention? Who does he listen to when it comes to getting decisions made?
This is a really big question about what Donald Trump is going to prioritize in his first 100 days. He's talked a lot about various policies, tax cuts, tariffs, and so on that he wanted to achieve over the course of his presidency. But we know that U.S. presidents really only get a few months when they come in with a mandate to get these positions. So I think that it's certainly the case that there's going to be a lot of jockeying for who has Trump's ear. Right now, it seems to be Elon Musk. I mean, he is playing a vital role in even the selection of the cabinet picks and others who are going to be around Donald Trump. So that could always change. Of course, we know that Donald Trump's ego, when it butts up against some others, has a tendency to kind of combust. But for right now, I think I'd look what Elon Musk is doing. I think that he's a pretty good bellwether.
Thomas, in terms of Elon Musk, so I think Tesla is gaining pre-market because he's close to the president, and that could give him advantages in terms of like self-driverless cars. The other story is Liberty Energy. That's also gaining 30%. So this would be cabinet members almost directly benefiting, or their companies directly benefiting of policies. Are there going to be checks and balances?
Yeah, that's a great question. And I think that it's reasonable to ask, simply because so many individuals who look like they're going to have high-level positions in the Trump administration do have these vested interests in finances, right, here domestically, and also vis-a-vis some other countries with trade in China and so on. And I think that there needs to be some oversight, but whether there will be or not is a big question, because a lot of these decisions are ultimately going to be made by the executive branch. Again, that's going to be dependent on who has Trump's ear. Whenever you talk about subsidies, for example, for electric vehicles, even if subsidies don't directly pour into the coffers of Tesla, for example, you could actually see the opposite policy where sort of subsidies are removed, but that sort of solidifies the position of Tesla as sort of the car manufacturer of electric vehicles that is the most dominant.
There are many question marks on who the president-elect has chosen for, the Department of Education, on what he wants to do with the Department of Education, and where he puts that health. I mean, will all of these recommendations or all these cabinet members really be confirmed?
Well, that's a big question. I think that two individuals are unlikely to be confirmed, Pete Hegseth and Matt Gaetz, or at least I should say that there are big question marks surrounding them. With Matt Gaetz, of course, he's facing a House ethics investigation. There's a big question right now going on in Congress about whether the results of that are eventually going to be released. Even if they're not, though, it's very likely that we'll see some type of leaks. And regardless, I think many sort of are asking whether he has the background and the expertise and the wherewithal to kind of fulfill that role. But we know with Donald Trump, it's really all about loyalty. Again, I think it kind of goes back to this. With the Justice Department in particular, there's a litmus test. That individual is going to have to shut down the criminal investigations that Donald Trump is under. And I think right now he's picking his guys.
We also understand that Donald Trump, likes a deal, and that he'll probably try to negotiate country by country with Europe instead of going through the European Commission. Does that put European countries at loggerheads? And actually, what do you think is the best way, Professor Gift, to deal with the president-elect when it comes to tariffs, to not be punished? Europe is extremely vulnerable at this moment in time.
No, you're absolutely correct. Donald Trump promising upwards of 10 to 20% tariffs on all imports into the United States, tariffs of upwards of 60% on imports from China. That could have huge effects, not only domestically within the U.S. in terms of raising prices on consumers, but also have kind of ripple effects into Europe and the rest of the world. The U.S., of course, is the most dominant economy, and anything that is going to smack of isolationism is going to be a big problem. You're absolutely right, though. Donald Trump's go-it-alone, sort of unilateral America First foreign policy doesn't prioritize working through international institutions, and so it's largely going to be on a case-by-case basis. I think there may be some opportunities for exemptions from these tariffs. Donald Trump has done it before with Apple, for example, the U.S. company. But yeah, I mean, countries are going to have to make the case that removing tariffs is ultimately going to benefit the United States.
Thomas Gift, thank you so much for joining us, director there of the Center on U.S. Politics at University of College London. I have a feeling, Professor, we'll be speaking to you a lot more, so don't be a stranger. Now, the G20 summit begins in Rio de Janeiro today. Leaders expected to show unity on climate action and global trade rules, two areas threatened by U.S. President-elect Donald Trump. Well, Bloomberg's David Gura has more from Rio.
On the formal agenda for this G20 Leaders Summit are debates about climate change and sustainability, global trade and development financing. But there will also be some hard conversations about conflicts around the world, including those in the Middle East and Ukraine. Russia's President Vladimir Putin declined to come to this week's summit, and Vladimir Zelensky, the president of Ukraine, wasn't invited to attend. This summit comes at a time when the winds are starting to change when it comes to geopolitics and the global economy. And the G20 Leaders Summit comes on the heels of another gathering of world leaders in Lima, Peru, the APEC Summit. While he was there, President Biden sat down with his Chinese counterpart Xi Jinping for a one-on-one meeting.
We haven't always agreed, but our conversations have always been candid and always been frank. We have never kidded one another. We've been level with one another. And I think that's vital.
Those two leaders last spoke in April by phone, and President Biden used this opportunity to stress how much the relationship has improved since he's been in office. There's now open communication between Washington and Beijing after 4 frosty years when Donald Trump was in the White House. Of course, Trump is heading back into power in the United States, and the uncertainty about what that means loomed large over that summit in Peru, just as it looms large over this one here in Rio de Janeiro. President Xi stressed that it's in both nations' interest for there to be a good relationship between the U.S. and China, but he said China would not be afraid to fight back if the U.S. crossed red lines. In Rio de Janeiro, David Gura, Bloomberg News.
Now, as you just heard, Ukraine is high, of course, on the agenda in Brazil. Bloomberg understands that North Korea may also deploy as many as 100,000 troops to help Russia's war in Ukraine if the alliance between Pyongyang and Moscow continues to deepen. Well, Bloomberg's correspondent at large for Europe, Alberto Nardelli, is following the story. He's been breaking a lot of news for us, and he joins us from Rio de Janeiro at the G20. So, Alberto, 100,000 North Korean troops, even if hypothetical, could be a huge escalation. Can you give the figure a little bit of context?
Absolutely. I think the first thing to keep in mind is that we're not talking about 100,000 troops in one go. This would be about rotating troops in batches, and so you would end up eventually with North Korea's contribution as high as 100,000 troops. That detail said, it is a major escalation. The deepening alliance between North Korea and Russia brings the conflict to the Indo-Pacific region. There are lots of security concerns around that. There are concerns about what Russia is giving North Korea in return, in addition to lots of money. For this support, Western nations believe that China is uneasy about this deepening alliance too. And importantly, it is the key element behind the U.S. decision to allow Ukraine to strike some military targets within Russia.
So North Korea and Ukraine will be raised by several allies at the G20 summit. Alberto, what are we actually expecting? Is there anything that Europe can do at the moment?
So it's a very interesting summit because if you look at the formal agenda, the hosts, Brazil, have tried really hard to keep Ukraine and the war in the Middle East off the agenda. There'll be a statement that will cover both in 2 boilerplate paragraphs. But in terms of the more informal conversations, in terms of the bilateral meetings, the war is top of the agenda, and specifically this deepening relation will be raised by several G7 leaders when they meet others, including, for example, German Chancellor Olaf Scholz is going to raise this issue with Xi Jinping. On your question, what can people do about it? That's a very difficult question because nobody really knows. While China may be unhappy, will they actually do anything about it? The US has started to do something about it with the decision to allow these strikes, and those are specifically focused on North Korean and Russian operations in the Kursk region. Obviously, there's a big change coming in the White House, so we don't know what the policy will be in a few months. In terms of Europe, they're still discussing whether they will follow similar US policy changes, and Europe is still trying to get its act together in terms of what they will actually do on the broader Ukraine strategy once Trump comes in. And of course, to be able to do that, they need to first understand what is Trump's actual policy, because beyond big headlines, there still aren't many specific details.
Alberto, thank you so much. Alberto Nardelli there in Rio. I urge everyone also to go and read actually Alberto's story on the website and on social media. Now, coming up, AI hysteria has largely played out in the stock markets. Now, debt bankers want to get in on the $1 trillion payday. Our big take story is next, and this is Bloomberg. Welcome back, everyone. Now, HSBC has asked hundreds of managers to reapply for jobs in the firm's newly formed corporate and institutional banking division. It comes as the chief executive, George El-Hederi, continues his hunt for ways to make the bank run more efficiently. So let's bring in Bloomberg's finance reporter, Harry Wilson, who's in London. Harry, this feels like a big deal. Do we have any idea of how many people he wants to let go of?
Well, we're getting sort of early hints at the moment of how big this might be. Obviously, you're dealing with two very large divisions that are coming together. So you're talking about roughly 90,000 people in the total division. But what we're writing about here is actually a much smaller subset. We're talking about the absolute top senior management. So really, you're talking about a cadre probably roughly in the sort of hundreds, low thousands. And at the moment, our sense is we haven't really got a proper idea of what the total numbers could be like. But I think we should be getting something probably in the next few days or even definitely in the next few weeks.
So, Harry, overall, I mean, is this is not cost cutting? Is this like a restructure? Like, do we know what the chief executive is actually thinking of what he wants HSBC to be?
Well, I think what they talk about is a simplification. So you have, at the moment, a pretty complex global structure for the bank. The CEO is talking about trying to simplify that, trying to make the bank work better than it has in the past. But of course, when you talk about also senior job cuts, you inevitably talk about cost cuts as well. And I imagine they've already said that this is going to result in a net cost reduction. And I imagine, given the levels of people that you're talking about here, it could be quite a substantial one. But unfortunately, we're going to have to be waiting until about February at the moment for the further details on that.
Harry, thank you so much. Bloomberg's finance reporter there, Harry Wilson, in London. Now let's get to our big take. Marquee names from the world of finance, including Apollo Global Management, Blackstone. They're all getting ready to gate crash the AI boom. Now, analysis by Bloomberg actually estimates at least $1 trillion of spending is needed for data centers, electricity supplies, and communication networks. Joining us now for more on our big take story is Bloomberg's Tassos Vassos. Tassos, thank you for joining us. So what does this all mean for bankers? And actually, I know the story that you wrote with a lot of colleagues, I mean, the numbers are absolutely huge in it.
Of course, they're going to be huge. So the short answer is it's going to need trillions. The longer answer is how many trillions. That's a matter of debate. But the numbers are huge because you have all these massive black boxes, also called data centers, sprawling across the world. They're going to need massive amounts of capital to be built, and then you have to power them. And there's reports coming out that saying that a large data center, for example, requires the power of the city of Miami, for instance. And at the same time, when these are up and running, you'll need to cool them down as well. So as you can imagine, there are like three processes. All of them require massive amounts of money, recurrent amounts of money, which means that financing is going to be quite an issue over the next several years, which means a bonanza, for example, for bankers and private debt houses that are going to arrange this financing.
Tasso, I mean, when you're in the middle of a market frenzy, it makes so much sense. So we're always on our phones. We say, of course, this is going to change everything. AI is going to change everything. But what could actually go wrong? Could it be too good to be true?
Well, we do say that. Everyone who goes to, say, read this story on Bloomberg Terminal, they'll see that we use AI. If you do, a search on your phone, they use AI. So it feels that nothing can potentially go wrong. But it's a matter of timing, as always. We do speak about these trillions. Bankers are angling to get some piece of that pie. And the question is when that, part of the $1 trillion bonanza is going to come from. And investors are not going to be too patient when it comes to reaping the benefits of it. If you are saying there's a $1 trillion market out there ready to be reaped, not just by you, but everyone else out there, so you should have a guaranteed piece of that pie. If that pie is not coming in the next year, in the next 2 years, then investors are going to get quite, iffy about it.
Tassos, thank you so much. Tassos Vassos there with the very latest on the big take. Coming up later today, we are in Athens. You've been wondering why we've been in Athens all day, but actually we're here for the Greek Prime Minister, Kyriakos Mitsotakis, along with the country's central bank governor. We're here for a special event, really looking at the future of the Greek banking. And this, remember, is after, it's amazing how Greece has come a long way since the crisis about 15 years ago. So we'll have plenty more on that shortly. This is Bloomberg. We're here in Athens for Bloomberg's Future of Greek Symposium, or Future of Greek Finance Symposium, for a deep dive into the country's banking sector as it enters a new era. Now, we'll be joined by the Greek Prime Minister, Kyriakos Mitsotakis, Bank of Greece Governor, Yannis Tornaras, and, of course, chief executives of the top leaders in the country. Now, you will be able to follow all of the discussions on Bloomberg.com. For now, let's bring Bloomberg's executive editor for Europe, Chad Thomas. Chad, I'm excited to be here. I'm here with you. We'll do a fantastic coverage because it's incredible to just think back, to 10, 15 years ago and how far Greece has come.
Yeah, I remember coming here 10, 15 years ago, and the mood here was pretty abysmal. Now, when you look at the economic stats for Greece, they have growth that outpaces the Eurozone average. The unemployment rate has come down to 8%. They returned to investment grade last year. And the banks have now all been privatized. They were, of course, owned by the state in that bailout process that took place 10, 15 years ago. So it has been a remarkable transformation. I'm really looking forward to the discussion today with both the Prime Minister and also to hear what the bank CEOs have to say about what's the path forward for the banks now that they are in private hands again. It potentially opens up more opportunities for them.
Chad, again, this is, a country that politically has been quite stable. There are question marks about what happened over the last couple of days with nationalists being kicked out of the government. But it's incredible. Do you think this is a blueprint of what Europe could look like? And again, the banks have now facing potential M&A and things like that we should watch out for.
Well, certainly there are interesting things to watch out for in Greece. And also one of the things that I think we should all be thinking about is what role will Mitsotakis try to play on the global stage? He is now an elder statesman for Europe. He's one of the few leaders still in power in Europe who actually worked with President-elect Trump when he was president the last time around. They've already had conversations with one another. Mitsotakis has invited the president-elect to come to Greece and in theory, have some sort of a big event here. So it'll be interesting to see how he tries to be that elder statesman, if you will, for Europe on the global stage.
What's your killer question for the banks? It's probably dividends and whether they're going to do some kind of M&A.
Yeah, that's always the question that we want to ask, right? More money to shareholders, and are they going to buy anything?
There you go. That's the perfect teaser in a nutshell. Chad, thank you so much. As always, Chad Thomas, our executive editor for Europe, Chad Thomas. So we'll have a full roundup, of course, of everything that's been happening in Greece and that will happen in the future. A reminder, you can watch Bloomberg's Future of Greek Finance Symposium on our website as well as Live Go. We'll have some opening remarks. They start in around 30 minutes from now, and then we'll be joined by the Greek Prime Minister Kyriakos Mitsotakis, the Bank of Greece Governor Yannis Tornaras, and then we have, of course, the top 4 systemic Greek banks. We'll be joined by the chief executives there. They'll also get a couple of questions on Trump and, of course, tariffs and what's the best way to navigate that. Up next, Bloomberg Brief, Danny Berger, Manus Cranny in New York, and this is Bloomberg.